And we are live, guys. Welcome to a very, very, very exciting DCA session this Monday. Finally, Monday. James, how are you doing?
Good, good. A little rocky out there so far this morning in the markets. Some weird stuff going on, but
absolutely, Ivan.
not bad.
How are things?
All good, all good. Good to be back, guys.
You changed the Christmas sock from your microphone.
No, it's the same. It's just
It's still a Christmas sock.
I still need to order replacement for the actual official cap. But yeah, now you get the other side of the moon, so to speak.
It's the dark side of the moon showing there. So we have a packed agenda. We're going to talk about Bitcoin halving because now it's soon happening. Of course, the GBTC outflows, who is winning, the new ETFs or the outflows. We're going to talk macro. We're going to talk China. We're going to talk Jupiter, the airdrop. How did it go? What happened? We will talk chain flows, different flows, which, in and out. We will talk some philosophical metrics and purpose, Bitcoin, Solana. We will go into the next altcoin narrative, something that Ivan has covered a lot, I think very interesting. And we will talk about what do we think is the next leading trend. Will it be Bitcoin? Will it be altcoin? We will explore a little bit what's happening in the world. And we will talk about something that I called Era Digitalis, my 10-year investment plan. And I'm very curious to hear your perspectives on that. And anything else you guys bring up in the comments, so please ask questions. We'll try to answer as much as possible. Anything I forgot, guys?
Nope. Sounds good.
So, Bitcoin then. And when is actually the halving? I'm trying to check here. 66 days, 70 days, 72 days, 75 days. Any takers? When is it actually happening?
It's April 17th, I believe. That's been stable date. Some people say 20th, some people say the 14th. I think right in the middle, 17th is when it'll happen.
So, but fact is that it's very soon. That's indisputable in about 2 months. So how are you guys positioning? What do you think will happen? Will there be a dip before for the new ETFs to load up, or what will happen from here? Who wants to start?
Well, there's one piece of sort of breaking news, and that is Bukele is back in for a second term. So that's good for the whole Bitcoin space. He's down there in El Salvador. And in terms of the money flow, I track this very carefully, and there's a couple of interesting things happening. First of all, this is all of the money flow here after 16 days. If you can see that, let me know. But what's interesting is there was a lot of headwinds around Grayscale dumping, which was bad. There was like a huge FTX dump of over 1.1 billion in value, which had a big impact right kind of in the middle of this. You see where the red outflows, when they go dark red, that was kind of the FTX stuff. And that's really fallen off ever since, which is a good thing. The other thing that's happening, I think the most important thing to remember is in aggregate, this is what happened. And I just don't know where the supply crunch has gone. But let me zoom out for 1 second so you can kind of see me. Imagine a big U. So it started off with heavy GBTC dumping, but now the accumulation is rising on the part of the ETFs. But there's a few more headwinds potentially coming. But the big message is in 16 trading days, these 9 new ETFs took in 176,000 Bitcoin. Now, if you annualize that, so if you take 252 trading days divided by 16 days, the multiplier is about 16. And that is 16 times 176K. That's 2.816 million Bitcoin. That could, if this rate continues, flow into it in these ETFs. That would be absolutely startling. And that would have to bring around some type of supply crunch. But then again, as the price rises, people may sell and go into other assets as well. The other thing that came in, another piece of breaking news, is Genesis, which is the infamous bankrupt crypto lending company. They have requested permission from a US bankruptcy court to sell about 1.6 billion worth of shares in Grayscale. And this highlights not only the liquid nature now of Grayscale, but also another dump that'll come from Grayscale. The question is, can the new ETFs absorb that 1.6 billion? That'll be bigger than the FTX one as well. So that's kind of what I see regarding the ETFs, Bitcoin up to the halving, 75 days left approximately. But there's other headwinds out there in the market too. The Democratic government of the US still has the knives out for Bitcoin miners, so we can talk more about that too as well. But lots of weird stuff going on.
So if we
James,
start
you're a
on-
bit down today. You gotta get that energy back. Let's see if we can cheer you up.
I didn't sleep well last night. I didn't sleep well. I was watching.
No, but
watching
listen.
stuff happen.
But the good thing is, although all of this, GBTC, FTX dumping on us, everything that's going on, Bitcoin is still the same as it was before the ETF. It's just sideways. So many people are saying, "Oh, it was the news. It was so bad. ETF failed. Low inflows, massive outflows from GBTC." Well, at the end, it's not positive, and the price is sideways, and we have the halving. And all in all, in my mind, this is very, very positive, because imagine if that 100 to 300 million per day disappears. How much they're selling in GBTC? Around 150 million, 200 million per day. Just that probably will teleport us towards 50K. And in terms of the halving, like you asked, CTO, I think that as always, we're going to see some kind of disappointment from the perspective of halving happens and people expect something, and then maybe it's flat, kind of like with the ETF. It is classic. It's been the same in the last halving, and then towards the end of the year, that's when we will start to get the steam and the momentum if it progresses like the last cycle. And that's what I'm preparing for. But at the end of the day, we all know market is going to mess with us. We all know it's probably going to be something different. But I'm prepared for the standard scenario of kind of people getting excited before the halving, then kind of sideways, maybe selling the news. But we need to be prepared completely opposite. Maybe it starts pumping very, very quickly even afterwards, and we don't have to wait for Q3. But my number one scenario is that the real gains in Bitcoin are going to come in Q3, Q4. And the most important thing right now is to be in great alts, because before the halving, I'm looking at it as quality alts are super cheap and very low risk right now. As Bitcoin gets through the halving and as we go into the late year of 2024, the risk will just start to increase in alts, because new alts are going to launch at higher market caps. People are going to get more greedy, and the deals are going to be fewer. So that's my number one mission right now, to position as much as possible in great alts. Halving comes, I don't care whether it's going to pump instantly or not. I'm prepared to wait until the summer and end of the year, and we will reap the rewards in 2025. Yeah, that's on a big picture how I'm thinking about the halving, alts, and so on and so forth, and GBTC.
Oh, very, very interesting. I mean, we touched upon this a little bit already. I also feel that there's a few interesting observations we can perhaps add here. So BlackRock Vanguard has really sailed up in the race. And I feel that this picture was insightful, at least for me. Let's see if we can see it.
Vanguard shouldn't be in the race. They're not in the race.
Yeah, I don't know what they meant with that. But I feel that this picture, I feel really illustrates what's been going on. The red ones is the GBTC outflows, and the black line is the net. And it's very clear that the outflows have slowed down. It's very clear from this picture. I think maybe one of the clearer illustrations I've seen. Of course, some of the red just goes to the top, right? You just check out of this one and put it in a lower cost ETF at the top. But it's very clear here now that there's been a net inflow since, almost a week. And the outflows have slowed down. Of course, there will come another outflow rush then, but overall, the outflows have slowed down and not accelerated, because that could have been another scenario, that outflows start ramping up if they try to dump or something, but that has actually not happened. So I think this is very positive, actually. That's how I read this. And like Ivan, you said, I mean, the price action is strong. It has not dumped. There hasn't been a like the dump that we got, the sell the news dump, it was very small here. It's like this small dip and then straight back into the range. So I think price action looks strong, considering all this.
And we have two catalysts. Number one is Grayscale finally stopping to dump, and then of course inflation cut for miners in April, and just that should have a noticeable effect this year. Probably not like exactly at the date of halving, as it never is, but as the halving progresses, as we get more and more into the year after halving, as everything gets priced in, actually based on market dynamics and not just buy the rumor, sell the new speculation. That's when we should see.
And I mean, both these new things that are happening, like the ETFs, I think it's a slow process. Like we said here many times on the channel, that it's going to take some time for these pension funds and everything to start allocating some percentage into digital asset. That might take months or even more. Who knows? So it's like a slow process. And the same thing, what does the halving mean? It means that there's less supply from being dumped by the miners because they get less Bitcoin from the mining, so there's fewer to dump. But that's not going to transform the price overnight. It's slow processes. They were perhaps not selling the same day anyway. So, it's like a slow average move. But we also have, I think, supportive macro market. If we look at the third point here, that Powell made an interview. He's kind of a little bit worried for the future. And James, you had something very interesting about job statistics. Can't you share that? Because the news here was that the job statistics was very strong. So maybe the market is still, heating up and so on and so forth. But what did you uncover there, James? I saw in your video.
Yeah, there's a bigger story than this, and I'll try and explain before we jump into the jobs data. The head of the Fed got on TV and kind of did a little parade like, oh, the economy's fine, everything is strong. But typically when they do that, there's a problem under the covers. Historically, when people like Bernanke, etc., did that type of thing, it meant they were trying to calm the markets. There is a massive commercial real estate crisis. There's $1 trillion hole. There's a massive banking crisis unless you're a top 5 bank. Literally, the economy is on the edge. The European economy is in a world of hurt. Chinese economy is very deflationary, big problems coming. It's like the US market is the last man standing, and they keep talking about jobs, but I'll spend 1 second here on the jobs upside. This is what came out, I think it was on Friday, was a job upside surprise, 353,000 new jobs. Everybody's excited. Great, wonderful. And Powell highlighted again the strength of the US economy and the economic vigor, etc., which I think is part of a problem. But when you look at the actual data here, you can see this is from a guy called EJ Anthony on Twitter. He pointed out how the weekly hours are plummeting down to the lowest level since the COVID lockdowns, and also, way back to global financial crisis levels. And that is a problem. We also have the real estate crisis too, not just commercial, but also on the residential side, houses aren't selling. And the real problem, which they do not acknowledge, is all the jobs that are created are part-time. So full-time jobs, workers are working less hours. 36 isn't very much. I think we all here work 70 to 80 hours a week, at least. So doing 36 would be like a dream. But if you look at this red, that is the number of full-time jobs that have been eliminated. And then the green, it's all part-time jobs. It's people in the gig economy working 2 or 3 jobs. Hey, I'm a personal trainer in the morning, and then I'm an Uber driver at night, and then I work at Starbucks during the day. This is becoming all too common. This is not a reflection of a strong economy. And that's why I believe there's some weird stuff going on. Everything is kind of a big tinderbox. He did come out, though, and say one thing. This was a quick little tweet. Long run, he's very, very worried. He said in this interview that over the long course, the US is not on a sustainable direction at all, by no stretch. And it's kind of like everything's fine. We're all going to die eventually. Like things are maybe 3 years, 5 years from now, things are going to completely.
But guys, the data is fully correct. It's fully correct. If you look through the lens of Bidenomics, because through that lens is the best economy ever, it's most jobs more than ever before, biggest growth. And I'm wondering when the Fed is going to start helping Biden to pump up those Bidenomics even more, because that's what's missing right now. And the rate cut probably is going to come very timely before the election. And yeah, I mean, they need to fake it for Bidenomics to look good. I mean, and just like Goosey said, Bidenomics is like the lens of the lie. So maybe it does make sense if you know which lens they're applying.
Well, I've got a theory on that that might be a little bit controversial. So the DNA of Jerome Powell is Republican, not Democratic. He always says he's independent, but really he is Republican. Second of all, he has to walk a fine line between saving his legacy, not torching the economy, but at the same time, not making the Democrats look good. So maybe he's going to wait until the very end, right to the election point, when people have had 4 years of pain. Then he will save his legacy, cut rates hard, flood the money with the system with money, etc. So that's just one theory. I could be completely wrong, but he's holding out way too long for these rate cuts, and the damage continues to mount out there in so many different places.
So what's the conclusion from this? What will happen with rates? They will, because Powell is a smart man. He might say one thing, but of course he knows all these things. So what's he actually going to do you guys think? He will lower the rates faster than he has to give show to, or what do you think, James?
I think they see a lot more problems than we see. Like if I see all these burning buildings, he's got to see a lot more real time data.
Yeah.
So they know there's a problem. So he's definitely jawboning. But I think the only reason he's kind of postponing the rate cut is the fake jobs data, which he knows is fake. If I know it's fake, he knows it's fake
for sure, right?
And that brings me to the conclusion that he's trying to torch give the Democrats a bad look. That's the only explanation I have. So they will have to cut rates. I mean, if you forecast forward the interest on debt, it will be 3 trillion very soon. 3 trillion is 67% of the total tax revenue, maybe a little bit more, because during a recession, tax revenues go down. So it could even eclipse that. So they have to cut, unless they're planning that great reset too, or they just want to torch all the banks and roll them into, JP Morgan, and then have them run a central bank digital currency. That's the other angle. But this is all part of why we look at this stuff, because it all makes the case for Bitcoin.
Exactly. That's why we love the screw ups in the traditional economy.
Well, not exactly, because it hurts everybody though too. So
what's happening in China then, guys? There is a lot of dumping. 7 trillion lost in value over the last 3 years in the Chinese stock market. They're introducing restrictions. You can't sell, you can't short. Please don't dump anymore, says the Chinese ruling party, I suppose. But could this spread? I mean, this is huge values lost in the Chinese stock market. We're not really seeing it in the Western stock market, but this is maybe worth noting. What do you guys make out of this? Does it matter? Does it not matter?
Well, it's interesting because I actually got into a first nibble into a position in Chinese stocks for the first time in a couple of years. I did buy a name called Alibaba about 2 weeks ago. And actually, this is kind of a lesson for investors. When the whole world is all of a sudden talking about the fact that China is dying, it's imploding, et cetera, that's your buy signal. But you got to be in before you hear that. So if you look at, you can pull up the chart of Alibaba today. It's very positive. The things I like about Alibaba is this. Let me pop it up. Boom.
Yeah, just to mention, to add to what you said, I mean, price is at support. The whole index of China, the stock market is at support. So let me bring this up.
This is the Alibaba PEG ratio. If you see something that has, pretty rapid growth in a normal environment and the PEG is under 1, it's a very bullish sign. And that was kind of my thesis. Again, it's just a small nibble, definitely not financial advice. but I entered that position about 2 weeks ago. And if you look at the market today, every headline is about China exploding. And of course, last I looked, actually, Alibaba was up, but let me see where it is now. Yeah, it's up 3.5%, which is a big move for a company that size. So
Yeah,
it's
exactly. It's instead of buying at the peak when everyone is crazy on 300, now it's at what, 74, and it's close to support.
Exactly.
Very interesting. Interesting. So you don't see that this might spill over to the...
Well, China have a huge deflation problem right now. The people on the ground are suffering. The Chinese always kept all their wealth in real estate. The average house in China fell between 40 and 60%. So they took a huge hit there. And that could actually also be good for things like Bitcoin in the future, too. They're looking for another asset to diversify into. But I think it's only a matter of time before the Chinese government really opens up that money printer and starts flushing hundreds of billions into the market real fast. They have to. So
yeah, and then it might pump fast back again.
Yeah.
Let's switch gears. Apparently last Friday I said Juniper instead of Jupiter. I do know it's Jupiter. I think maybe only James can relate why I said Juniper, because I spent like 10
Network.
years flying around and explaining how to integrate Juniper and Cisco routers to our core routers. I do know it's Jupiter and not Juniper. So, but this airdrop was very interesting, and it really put a lot of capacity testing on the Solana network. It was incredible. What happened here? James, as a Solana support team manager, do you want to start?
Yeah, well, I think you guys know this. It's biggest airdrop in history. It's also the most popular DEX aggregator, most popular DEX. It has like 1.3 million traders. I think in the first 3 hours of the Jupiter airdrop, the chain had over 600,000 people hitting it at the same time, and Solana didn't miss a beat. So that was very, very important. There was no loss of anything. And that's apart from all the other stuff that the chain does. So they took it like a champ, which was good. A lot of people are concerned about, well, it's gone down. But that's what happens when you give a lot of people airdrops. They sell them and then they buy meme tokens. That's how it works. So, but it's actually been holding up pretty well. It hasn't hit my kind of target yet. And I have, just for the audience here, 5% of my Solana alt position is in Jupiter. And that's 5% of my Solana position. So if you multiply 5% by 5%, that's how big my Jupiter position is. It's very insignificant. I'm waiting for lower prices to get more. So, but it is a very interesting project, and they have a lot of good stuff going. Have you guys been monitoring that, Ivan? Do you get some Jupiter?
Yeah, absolutely. This is very important from the perspective of having infra that's ready for mass adoption. And I think whether it was Anatoly or Raj that was discussing the capacity of Visa, and that Solana is not that far away. There was one tweet basically after the Jupiter airdrop, which made it pretty clear that this bull market has something special, and that's that we have infra which is ready for mainstream mass adopted applications. And it's a big component to my bullish thesis overall as well, because I hear some bears still say that, oh, nothing has happened in crypto, it's the same DeFi, it's the same NFTs, nothing new has happened. But what is actually new is that you can have things that are fast, that have adoption, that have the audience, the users, their expectations are met in terms of fees and in terms of user friendliness. So yeah, I think that's great. And what Solana really has done is the local fee market that has fixed a lot of these scaling issues that they've historically had. And that's Jupiter has been a very good proof of the tech and that it works, because the load was crazy, and like you say, James, they handled it pretty well. And the question is now, what other coins, what other projects are going to utilize the infra, whether it is gaming, whether it is payments. But I do feel that right now at this stage we have enough block space of fast blockchains to support all kinds of use cases, and now it's time for the devs to step in and deliver this mainstream adoption use cases, which we can now.
Yeah, because this is new. I mean, I remember the first DEX, it was like 2017, and it was called, what was it? Ether Delta. It was like one programmer who had programmed it, and it kind of worked. It actually worked. It was really bad, and it was really slow, and it often failed, but, you know, it was a DEX that was running in a smart contract, but that could not handle mainstream adoption. But is it so that this is the first bull market where we actually have mainstream ready technology infrastructure? I think it is, right? We didn't really have it last time.
And I
Yeah.
think, yeah. Sorry.
Sorry, Joe. I also think it's key that Solana projects, they have good on-ramps to ETH, because looking, for example, at Tensor and other NFT marketplaces, you can buy their NFTs with ETH. And that's important because most money is still on ETH, but they have done it in pretty good way with all these integrations where you can spend your ETH and then get onboarded into Solana. So that's a good sign for this on-chain flows we've been discussing.
In fact, everything what you're seeing now is everything kind of integrating together. You have, for the first time ever, like you mentioned, Ivan, the infra is mature. It's fast, it's cheap, there's very little spreads, it's very, very, very good for traders. And that has never existed before like this. And then at the same time, you've got the ETFs, which are putting all the traditional, say, you know, all those companies that would let you buy Bitcoin and they'll hold it for you and then they'll lose it, they'll lose their keys and all these trust places. That business is all going away. And by the way, everybody watch for things with the words prime and trust and safe in it. Never a good sign. And so who would use one of these services when you get an ETF at 20 basis points of fees? The answer is nobody. And then you have the traditional centralized exchanges. Their fees and spreads are very high. Not only do you get a bad spread on something like Coinbase, but you got to pay $50 too as well for fees. So I think it is the right time for DEXs to come to the fore, and I think it's an exciting time, and that's why you're seeing a lot of flows happening in this regard as well.
Yeah, we'll come back to the new narratives, like what will drive the next cycle of altcoins and so on. But let's stop a little bit and look at the chain flows, because James, I really like that picture that you have. You show kind of where flows from one chain to another. How is that going? Could you share that again here? Because I think it's very insightful.
It's a Sankey chart, as they call it. But basically, the big message here, it shows you, whatever period of time you take 3 months, you take 1 month, you take 7 days, you take 1 day, you can track exactly how much money is going from one chain to another. And over especially the last 3 to 4 months, there's been a massive moving from chains like Ethereum to chains like Solana. Even now, what's happened over the past 2 to 4 weeks is Arbitrum has begun drainage into Solana. And this is the power as well of the other aspect that Ivan mentioned, is the cross-chain element. You can now do everything cross-chain. You can trade Ethereum perps on Jupiter. So you could hedge your Ethereum on a Solana chain, which is kind of crazy. And whatever you deposit to collateralize it as well is up to you. But that is a very interesting trend as well. So we're seeing move. And if you look at, for example, here, this chart, this is the volume Jupiter versus Uniswap. Uniswap is the granddaddy of DEXs. And now Jupiter, the little new player, does more. And it has 3 times the number of traders, over 1.5 million traders. So when you talk about things like use cases, this could be an exciting one for the future as well.
Yeah. So there's definitely still flow of money over to Solana, which I think is very interesting. And with that background, the divergence here is very interesting. Like, on one side, we have stable old-time Bitcoin, 7 TPS. On the other side, we have Solana with, what is it now, 700,000 TPS. And so on and so forth. Time to finality on Solana, 2 seconds. Bitcoin usually needs 6 blocks or something, so it's like 1 hour. The metrics are really diverging here, while, of course, Bitcoin is the more decentralized, more stable, more recognized, and so on. Are we seeing a divergence of blockchain? Will we have one utility chain which is used for everything we use it for, and then we're really getting the store of value chain? Or will these intertwine? Will the layer 2s on Bitcoin actually succeed? And Bitcoin will still be used as peer-to-peer electronic cash on some layer 2 solution in the end? Or where are we going? I give this to you, Ivan. What do you think? Where are we really going with the whole architecture?
Yeah, I think the end state is going to be a lot of cross-chain with all kinds of bridges, all kinds of infrastructure. And it's still right now difficult to imagine, but my thesis is still that the incentive to create a new chain is so high that we will still have them coming. And there is never going to be an end state where people are just happy with the chains that are in existence and no one creates new chains. In fact, probably if you look through time, the amount of chains is just growing exponentially. And I don't know if that's ever going to stop, because I mean, why wouldn't you create a new Solana? Because there's always something to tweak. There's always something you can do better. And as long as the market will reward you for that by giving you a high valuation, which is, several hundred million is enough for people to start. And we see it coming all the time. There's going to be now layer 2 on ETH, which is going to be like Solana, which is Eclipse. It's going to have a Solana virtual machine. There's going to be parallel EVM, which is Monad. So from that perspective, I don't see a future where we don't have cross-chain figured out, and that will have its pros and cons. I mean, the pros is that we're going to have a lot of innovation. We're going to have all kinds of new technologies making it even faster. I mean, Solana itself is a challenger to ETH, which came out from the same incentive. Why don't we build something better? The con is obviously going to be that you as a user will have to know what you're using in case a bridge is bad. But at the end of the day, we'll probably find a good equilibrium there with secure bridges, secure infra. And yeah, whether it's going to be in 5 years or 7, who the hell knows? But the fact that there are always new chains, I don't see that ever stopping again. And curious to hear what you guys think. You think that we will settle for one chain? The only thing is Bitcoin. I mean, that is the only thing which I don't think is going to be touched, because it is the iconic, historic store of value, which the world is convinced of. The rest, I think, will be challenged, and will have either alternatives or layer 2s, or they all connecting and working together.
Oh, absolutely. I'm also pro innovation. I think that even the best utility you can get an even better one. Absolutely. That can have a new narrative. And there's so much incentive, like you say, because the next one will start from 0 and can go 1000x if they succeed. There's a lot of money and excitement in that. Let's take a few questions here, by the way. This influencer too complacent bullish, Mr. Viking. Crypto will crash gigahard when US indices have an inevitable correction. And I can clarify that. I mean, right now, let me add this one. The trend is up. So I assume it will continue to be up. But if there comes a huge correction, that can happen any day, then I see that as the best opportunity to buy. Then I'm going to deploy more capital there. I'm not saying it can't happen. If it happens, I will take action on that. I'm prepared for that. If it happens, if it doesn't happen, okay, great. Then what we have continue go up. We win either way. I think it's a good question because anything can happen any day.
And when you talk about the market as well, you have to understand the underlying narrative, and people miss this. They look at indices and they looked at things like crypto market cap. You can't. You have to look at what's driving the market. All 2023 was 7 names. So far this year, it's like 4 names. And
yeah,
that's what you need to look at. So if you look at the stock market on Friday, it's a bloodbath. And then you have Nvidia going up another ton. So it's all about AI, okay? And that is what people need to look at. And this is what people miss. Now, do you think AI is going to slow down even if the Fed says, oh, we're in a recession again? No, not at all. And that's the big picture. And also, markets are forward-looking. So if there is, heaven forbid, a recession, the first thing they will do is cut rates. Second thing they'll do is fill the market full of money, and that will raise markets. But always have some cash on hand for these uncertain times. I'm actually more concerned about stuff going on in the Middle East than the markets and macro right now. I think that's the bigger issue that could bring about a big dip per se. But the other thing as well, you can't ignore the halving is happening. That will be big. The ETFs are here. They're gobbling up Bitcoin. There's $6 trillion in the sidelines. There's lots of goodness. Rate cuts are coming. The goodness outweighs the badness.
Exactly. And I think this is a good question. I mean, how much are people using different services? And there's some examples here. Do they actually have clients? I think this is exactly the right question to ask for any project. Go in there and see if anyone is actually using it. How many people are using it? Is it useful or not? Because in many cases, the answer is not. No one is using it. It's just marketing. So, do go and find out for any project you're interested in. That's my strongest advice.
And that was interesting because to talk about Filecoin versus Shadow, and I have actually kind of done face-offs between those two. And I do look heavily at the users and adoption. Same thing with Chainlink versus Pyth. And the Pyth numbers are incredible. And Pyth trades at a tiny fraction of the market cap of Chainlink. So for me, it's like, okay, if they both do the same amount of stuff, but one is trading at the 1/8 the market cap of the other, which one would you buy? For me, it's a logical question, logical answer. And and the beauty of a lot of chains right now, you can pull real-time data, real-time daily active users, real-time transactions, real-time fees, real-time adoption. You can see a track over time. The chains that hide that data, don't touch them. They're very dangerous. That means they are dead.
Let's take a few more questions. I see a lot of worried questions about Tesla, asking different little bit worried questions. Are we approaching a buying opportunity in Tesla? James?
What do you think I was doing a few minutes ago? And I haven't had a chance to post it yet. But yeah, I just nibbled on a little bit. So you have an absolute FUD storm like we've never seen before. Everybody, every piece of media, every newspaper, every TV channel on the world, every politician in the United States, they're going after him because he's threatening everything. He's threatening space. He's threatening global telco. The Wall Street Journal CEO, I said last time, I think we were on DCA together, he said, for the first time ever, we don't control the narrative. We don't control the media. It's all on X. It's all real time. It's all social. This guy is putting chips in paraplegics' heads to help them walk again and operate a phone and a computer. That's going to happen hopefully this week. And that the operation just happened last week. That is unthinkable. So this guy threatens everybody. I mean, now today's news is, Siemens will stop buying Tesla for their corporate fleet. Who cares? Who cares? You get, like, the cars they make have 20 times more features and functionality than anything else at a lower price point, and the total cost of ownership is 0. So I'm actually going to do probably a short video on the true total cost of ownership of every expense I've had with my car for 5 years. It's a Tesla Model X. Like 0 gas, the cost of charge, 0 repairs, the same tires, and that it's just hated. But the big thing is a part of your agenda was your 10-year digital plan.
Yep.
I think that's important because markets are irrational. Over time, they're a voting machine. Right now, everybody is spreading FUD against Tesla and Elon Musk. And you have armies of media players doing exactly that. But this is probably the one chart that I modeled with a guy called Søren Basher, not modeling on a stage or anything, but modeling, financial modeling. And we came up with, for some reason, it's not clicking, this. And this is the most important thing to note. And this is what I'm positioning myself for. And I use your name, Era Digitalis. This is my Tesla valuation model with all the inputs from Søren Basher across all the product lines. And it's very, very hard for people to realize how possible this is. But when you look at their dominant lead in so many different areas, it'll probably happen. We're talking about energy storage. We're talking about robotaxis. We're talking about bots, etc. The auto bidder, FSD. These are all huge, huge game-changing technologies that will drive asset value. The question is when.
Yeah. Very interesting. Very interesting. Let's we come back to that a little bit, but let's talk altcoins a little bit first, because Ivan, you had a very, very interesting coverage on. By the way, guys, if you're not already subscribed to James and Ivan, you are really missing out, but I think you all are. But if someone hasn't subscribed yet, you should definitely do that. Links in the description. So, Ivan, you covered something about alt narratives. Which ones do you think will play out? What are we seeing? Is Bitcoin L2 coming, or is it other things that will drive the next narrative? Can you talk about that for a while?
Yeah, let me share the screen here for a bit. So the first thing that caught my eye when I was doing research for today's video on our channel is the fact that currently, according to Token Terminal at least, and I don't know how they count the number of active users because there are different ways to do it, but according to Token Terminal anyway, the third biggest chain when it comes to active users, daily active users, is Ronin, and that's a gaming chain. You don't do anything else on Ronin except trading game assets and playing Axie Infinity, playing Pixel in particular. And I think the reason why Ronin has gone out of no, because I haven't seen it here before, I think it is due to the growth of Pixels, because Pixels is this game on Ronin. They recently migrated, and they're pulling in hundreds of thousands of users. If you go and follow Luke, which you should if you're interested in this. I mean, he's sharing numbers from their. Oops, you don't see here. 1 second here. He's sharing numbers from their Google Analytics, and this is the founder of Pixels. And yeah, I mean, it is in hundreds of thousands per. Is it per month? Yeah, it's crazy numbers. And this was even before their coin announcement, because recently they also got another boost up due to the fact that they are launching an airdrop soon. But yeah, that's quite interesting from the gaming perspective, that there is already infra that supports these numbers. And it's in gaming. We also saw on the same magnitude on Solana with Jupiter, like we discussed. And yeah, I mean, pulling all of these pieces together, it makes me very bullish on gaming, very bullish on this whole bull market. Basically, that we have things in place to take us there. There are Bitcoin layer 2s, like you mentioned, CTO coming as well. There is, for example, Stacks, which has been around for quite some time, but there are new ones as well coming out, and creating new ways to anchor themselves on Bitcoin. It's very raw, like everything is changing so quickly. So there are no like big abs there currently, but I think it will happen this bull market as well, that we will see a massive game on top of Bitcoin, or a massive DeFi app on top of Bitcoin. It's a question of time, because people really love building on top of Bitcoin, like we've seen. So by looking at the numbers of users on Ronin, looking at, they actually have a clear game which people love. Like, it's not, some bots that are just farming it. People really love it. It's a real community. And then I'm thinking, what if we have 5 more of these games, or 10 more, which is not that far-fetched, all coming from within crypto? I think that's another interesting thing, that it's not like, Blizzard comes out and does a game. This is a crypto native game. And the big games, they will be crypto native. I don't think that they will come from outside. I know some people hope that, big game studios will adopt crypto. It will not happen, because they have their business model, they have their business figured out. There's no reason to go into crypto and take a risk. Instead, what's going to happen is that new games are going to start building within crypto, like we see now, for example, with Pixels. They're going to use crypto features to the best extent possible, to create loyalty, to create ownership, because here in these games, normally you own things, your land, your items, you get in-game assets that you trade. And that's something that I think this bull market will figure out, how to make a system where it just doesn't hyperinflate to death, which was the problem in the last bull market with all of these games, where you get assets in game that just hyperinflates to death. But I think this time around, all of the lessons from the last bull market have been learned. And this time around, I think we're gonna see balanced games, just like in the MMO space. If you guys, I mean, you probably played MMOs way before I was in the gaming. I was old enough to play games, but from the beginning, it was also a big challenge to make them balanced. But you fine-tune the economy, you fine-tune the sinks, the money sinks in game where users spend their assets, and you can make a fun experience which is balanced. So yeah, based on all of this, I think gaming is gonna sustain. This is another chart we showed today, CTO, that you're showing as well. If we can zoom in on that, I think there are two narratives which are strong and not going away, and that's AI and GameFi, because they're roughly the same for the entire year, and the other ones, they come and go, they become bigger and smaller. But GameFi and AI, those are roughly the same. GameFi has the difference, though, is that GameFi actually has real users, like we just seen, and there is an easy way to get more people involved. AI, it's still, it's still a bit vague. It's vague. It's still when ChatGPT does something in the real world, AI coins pump. We still have to see the real adoption of real use cases. But from a narrative perspective, those two are super strong and will likely continue to be.
And how about trading? Like trading, you mentioned that also, right? Trading is also a huge use case. It just doesn't come up as a narrative. But of course, the one thing that blockchain has really crushed it on is trading platforms, right? For trading coins, trading NFTs, whatever.
So let me show you something here. So what's interesting is that on Solana, they have figured out a very nice system for NFT trading. Number one is that the royalties are guaranteed on Solana. So if you are a new project, most likely you're going to pick Solana today, because here you're going to have royalties for your NFT enforced by the chain, because it is on a smart contract level. But another interesting thing is that this is really made for traders, because if you go to Tensor, for example, you go to Market Make, like you can be a market maker in the NFT space very easily here. Like you have a bunch of NFTs, you tell the system when to sell, when to buy, like at what price, how the price will increase with each successful trade. Like I love it, because that's what NFTs are all about. Like they're not really about collecting, they are about trading. So if you make it, number one, easy to launch new coins and earn via royalties. Number two, you make it easy for all the traders to trade it. And you have this additional, because what's the difference between a meme coin and NFT? It's a very small difference, but I think the difference is significant. In the NFT, there is this additional level of collectible that it's not, just any meme coin, and I just have one meme coin out of a trillion meme coins in the same coin. No, I have a specific one which is unique. It's the same psychology that is behind Pokemon cards and everything else. So it's fantastic that it's very tradable. So gaming and this like trading, it's now becoming one, and I love it because the people that use it and play these games, it's like people who've played games when they were younger and now have money to trade and be part of it. And that's why you got to combine the trading part, the financial part, and gaming part, so that you don't shy away from Web3. Some games say we don't want speculate. Man, listen, Web3 is speculation. It's trading. And we in crypto, most of us have been playing games before, and now we can play crypto games, and it's connected to trading. It's fantastic. And I think all of this is coming into a nice convergence. It's all converging in a nice way, with scalable enough infra, with interesting enough games, interesting enough marketplaces, and interesting enough games that are balanced and are not just hyperinflated, and are not just for third world country farmers who just want to like earn monthly wage, which we had the last bull market, because that's not fun. Like that's not real Web3 gaming. So I really feel that this time we're shaping up way better overall in this gaming.
I think important insights for positioning ourselves for this bull run in alt market, and very interesting. Let's jump forward a little bit because we have had countries positioning themselves like El Salvador, Bukele, but now we see also, for example, then the governor of Texas saying things like we want to be the home of innovation and Bitcoin is the cutting edge of innovation. We start seeing states in the US starting to compete with a similar narrative. I thought that was very interesting. James, you who's on the ground in the United States of America, do you see these questions heating up?
Yeah, so there's been a huge Orwellian push now to drive. They have this new edict from the EIA, I think it's the Environmental Agency, against Bitcoin mining operations. And they want to try create a hyper detailed registry of miners down to the particular ASIC model and how much electricity that these miners are using. And people say it's Joe Biden, the president of the United States, going after them. I don't think he cares. I don't think he knows. But I think Elizabeth Warren is behind this. She could not stop the Bitcoin ETFs. It's driving her crazy. So now her next goal is to stop the miners. And again, it's innovation. And all the miners in the US, they're all in places where there's an abundance of renewable energy at a very low price. If they don't use it, it'll waste away. It's just crazy. So this is kind of a concern for me right now. Again, more government overreach, but thank goodness for people like this guy, Greg Abbott in Texas. He is very pro innovation, pro jobs, and literally Bitcoin mining is bringing jobs to rural areas near wind farms and solar farms where there is no industry. And now for the first time in years, like if you look at the global math of farming, like what percentage of farming is global GDP? Have a guess.
Don't know.
1%.
Oh,
1%.
really?
Yes. It's very little. I mean, we live on what the farmers do, but somehow no value accrues to them, which is probably why you see a lot of violence in Europe right now, in France and the Netherlands and stuff like that. So again, the world should be pro-innovation, pro-freedom. The miners cannot. There's no Bitcoin miners in California because Pacific Gas and Electric charges way too much per kilowatt hour, and they're just going to increase rates by another 26%. So you'll only see miners go where there's freedom and cheap electricity. That's it.
Yeah,
So,
and I think from a technical perspective, what these politicians don't understand is that you can't move electricity from one physical location to another physical location very far away, or it's at least very expensive.
And you
So
lose
it's not that if
32%.
you have a lot of electricity in one place that you could have cheaper electricity somewhere else in the winter or something. It's a technical misunderstanding.
And also in places like Texas, it stabilizes the grid. Same thing in Georgia. During very hot times when people need air conditioning, the mine is shut down. And when there's normal weather, etc. So crazy.
Do you think banks will go after the stablecoin business?
Absolutely. Yep. JP
I think
Morgan are
so
very
too.
upset. They're not a part of that, milking that cow, as it were, which is
Yeah.
stablecoins. What was the profit? $2.6 billion
Bigger than
in
Goldman.
a quarter.
Bigger than Goldman.
I think it's dawning on them that why are we not doing this business, guys? This was kind of our thing, and someone else is doing it. Why are we not here? I'm sure they must sit in the boardroom and ask that question, looking at how profitable it is, how much money is poured in, how perfectly positioned they were to do this. They were better positioned than any of these other companies, Tether, Circle, all these ones. They must sit and ask, guys, why didn't you do this?
Well, the statistic, I can't remember what it was. I think it's Goldman Sachs, and these numbers could be way off, but they're kind of close. Goldman Sachs has 40,000 employees to generate less profit than 12 people at Tether can do.
Yeah. And it was funny, like
crazy.
the Tether CEO answered something, right? That, yeah, it's concerning for JP Morgan. They are not part of it, sort of. Yeah.
Yeah, but it is funny, guys, that it's $100 billion asset under management company, but the info we get is from Twitter.
Yeah.
From like this basic Excel theme. Like if you scroll down, there is like the basic one you learn in fifth grade, like have two columns.
You do like insert chart in Excel.
And they make more money than Goldman. Listen, they're not audited, so who the hell knows at them? I just hope that in case there is a black swan, is gonna be like after this bull market. If this is a black swan, let it happen in 2026. But normally the black swans, they happen at the beginning of bear, just like FTX collapse. I mean, all the scams, they collapse when in bad times. They normally don't collapse in good times. And I don't know if Tether is, but they're not audited. And we just have a guy on Twitter telling us stuff, which is great. And I hope it's going to continue for the coming 2 years at least.
Exactly. Let's talk about the next thing, because I had kind of a little bit, it's not completely new, but it all came together for me last week. That and long time, it started a little bit like a long time ago. I heard someone saying that there are no get rich quick schemes, but there are plenty of get rich slow schemes. It's just that most people don't have the patience. So, and if thinking forward, now we're looking like 5-10 years into the future, I feel that there is something happening. It is a new era of human civilization that is starting, and it kind of is starting now. Can discuss if it started last year or this year or next year, but it's around this time frame. And it's 7 different things that come together. First, the digital lifestyle that we in crypto discovered before everyone else. Everyone was sitting, we're having meeting on Zoom. This was crypto who used Zoom first. I never heard about the Zoom before. Everyone in crypto used Zoom. But then came COVID, and the rest of the world kind of discovered that you can actually work remote. You can have meetings remote, and you can, do everything digitally. You read digitally, you find your love digitally, you communicate with your loved one digitally, you do kind of everything digital. Then it's digital ownership. That's blockchain. That's a blockchain technology that we can actually have digital stuff that we own, which can be money, it can be NFTs, it can be things in games, but we can actually own it digitally ourselves. And that didn't exist before. Now it exists, and it exists in mass market capacity. Like James, you kind of noted that now we have it, and Ivan, you also noted that now we have that. Peer-to-peer media. Now we have this situation that people are moving away from news, even news websites. Maybe hard to read here, but it's like you basically people are moving away from New York Times, The Guardian, BBC, Daily Mail, Fox, CNN, News, MSN, everything.
What was the name of the Swedish? There was a Swedish newspaper that was community noted by Twitter. What was the name of that?
Exactly. One of the biggest Swedish newspapers had got a warning label.
No, exactly. It was a scam warning, misinformation.
Yeah, exactly. So, and it becomes peer-to-peer media. Anyone can write something on Twitter or X. Anyone can be a creator. People sitting here listen to us now. We're not a media company. We're just 3 guys. And media is becoming peer-to-peer, and it's digital. Artificial intelligence, I think it became clear last year for everyone that how big this is, that it's actually not just some weird toy. It's actually useful in day-to-day life.
I'd like to double click on that. It is the biggest revolution ever to hit the human race by far. And people just don't realize it yet. Maybe some do, but literally what this world is going to look like in 2026 is going to be mind-blowing. It will not be recognizable.
Absolutely mind-blowing.
Yeah.
And we're moving into a global world. So there is competition suddenly. We compete differently because we're working digitally, and businesses are digital. They can be moved anywhere. Different states in the US will start competing about the entrepreneurs. Different countries are competing about the entrepreneurs. And whatever is built is global. So it has massive reach from day one. And that kind of also has come gradually, but now it's here. Then we have virtual reality. No one has missed the launch from Apple last week. And VR isn't new, but it's approaching the point where it's getting good enough for actually using it. And while it isn't physical, the emotions felt are real for people. I think this will have also enormous. And we're having the brain links, which are, of course, the futuristic. You have the brain implants, but there's also less direct. We can, the Apple Vision Pro can read the eyes, can read the face expressions. If you smile, if you do things with the eyes. So you can kind of start steering things with at least your face only. And all these things, what I realize is that they are in synergy with each other. The fact that we have Bitcoin, we have blockchain, that's what's making will make VR more lucrative, because you can do real transactions in that world. We have the fact that protocols are global, makes peer-to-peer media stronger. Twitter wouldn't be as useful if it were different Twitters in different countries, but here we are. Creative economy, digital lifestyle, artificial intelligence will make the brain links more attractive. So between each of these points that are handed, there are synergies with all the other ones. And I think together will make a much, just like what you said, James. I think the change on the world will be much bigger than anyone can imagine, because these are 7 factors that are working together, and they're coming together around now. Plus minus a few years, COVID was a few years ago. Of course, crypto have been around a few years, but it's around now that it's getting good enough. Twitter, of course, not new, but it's increasing. We see a dramatic outflow from traditional media. AI, it was last year. Global protocols coming now. VR, it's this year. Brainlinks is a lot this year. So it's kind of happening now. And I think that if we can identify which players will benefit from this over the next 3, 4, 5 years, 10 years, and which companies will become irrelevant almost. They will go bankrupt as a result of this. I think here is the recipe for the get-rich-slow scheme over the next few years. And this is a kind of a big thing for me. I don't have the answer which companies it is. Of course, I can realize that of course, James has already prepared a slide.
This is
James,
how
I give over to you.
Yeah, this is how I'm positioning. I call these the top 10 disruptors. And by the way, your global protocol, I assume that is next gen communication networks. That would be like Starlink, correct?
Yeah, for example.
AI and machine learning, that's both Twitter. And of course, many companies do this, but there's only one organization that has its fingers in all of them, with the exception of AR and IoT. With smart cities, you could say they do it from the auto bidder on the Megapack electricity storage business. But then Neuralink, what they're doing is biotech and genetic engineering. The advances coming are incredible with things like DNA slicing. That is an absolute breakthrough technology. And you've heard people like Kathy Wood talk about this too. And then you got quantum supercomputing. Tesla are building supercomputers right now in bunkers underground as we speak, using the Boring Company, by the way. Then renewable energy and storage and advanced robotics, they're already here. EVs are now robots with FSD, and blockchain and cryptocurrency. So that's how I'm positioning myself. And it would be great to have a way of getting access to buying things like shares pre-market in Neuralink and Twitter and stuff like that. And there is a way, but it's hard. And you need a lot of money to get in. Did I have Tesla SpaceX in there as well? What they're doing is incredible. They're building a new space station in space with one rocket. How is that even possible? I can't even think.
Yeah.
It's just a crazy time to be alive, and the next 2 to 3 years will be face melting. So yeah, I like. Sorry for cutting you off, Ivan, but I'm very passionate about this, obviously. But what you said is get rich slowly, set your traps, be in position. The price today may not reflect the price tomorrow, but don't wait till tomorrow to build your positions. Ivan.
Love it, James. Love it. Yeah, at the end of the day, I think all of this points to the predictions that Kathy Woods has outlined in her reports. Because if you think about all of this, why would real estate matter in all of this? Where you're digital nomad, you have digital lifestyle, you have digital ownership. And currently, real estate, for example, is seen as one of the key store of values for most people. Just like we mentioned China, most people have their wealth in real estate in China. Why? Why would you have that in a digital world with this digital era, digitalis being true? So I think the biggest opportunity that is clear as day and it's not priced in is the rise of Bitcoin and cryptos as this next gen store of value, where we already now can see it being a no-brainer. Like the other things, what we're seeing with brain links and all of that. I mean, probably it's going to be a Neuralink, like you say, James, and Tesla. I mean, maybe, but to me, like the biggest no-brainer in the world right now is this shift from traditional store of value, like real estate, into Bitcoin. That I cannot see that not happening. That's the easiest bet of all, based on this era digitalis, and then of course everything else. Probably Tesla and X are best positioned there. But in terms of crypto, I love how well it's positioned as an investment right now for all of this.
Oh, absolutely. And seeing this, it's very difficult to understand people who are skeptical to crypto and so on. Like they're skeptical literally to ownership in the digital world and global money on the internet. They're skeptical to that, really. That's
But
very difficult
Tito,
to understand. While the
it,
same people will go and invest in a villa in a suburb, basic suburb where no one actually wants to live, but you have to live there. Otherwise, you can't commute into your job in the cities. Like otherwise, it's too far away. So you have to live in this like second category neighborhood where no one really wants to live. That they feel is a rock solid, stable and secure investment. And looking at this, I think, like you said, Ivan, I think it's the complete opposite. Perhaps in 10 years, there's no one who will live there in that whole area at all.
Yeah.
You can't sell the houses, perhaps.
And you see that actually, because I look at global real estate as well in my free time, which I don't have much of, but I'm obsessed with it. And if you look, like literally what's amazing right now is you have all the boomers, all the 65 plus with all the money. They also own all the big houses. And then you have negative birth rates. So soon, maybe in 10 years, 15 years, you'll be able to buy a luxury villa with 20 bedrooms for nothing because nobody will have the money to buy it. And there will be a glut of them as well. So what I anticipate for the future is gig everything, gig jobs, gig places to live. The old word used to be couch surfing, but people will become much more nomadic. It's like, oh yeah, I'm working down in El Salvador at a mining company for 3 months and I'm going to learn Spanish. Then I'm going to go and move to Italy and learn Italian and renovate a villa and then buy it for $30,000. So check out, there's a YouTube channel that's incredible and it shows you what you can buy for $50,000 in Italy right now. It is absolutely mind-blowing. So again, negative birth rate. I remember in the 90s, all my Italian friends, none were getting married, none were having kids. I said, where are the babies going to come from in the future? Literally. And now you see the impact of that 30 years later.
Yeah.
So.
And I mean, remember how everyone hated on Facebook and Zuckerberg and so on. I mean, his company has done pretty well and he was pretty early on the whole VR trend. And I mean, the Meta stock has done pretty well here. From the bottom, it's up, 400%?
Yep. And they've done nothing but lose a ton of money on their VR, metaverse, the goggles. They've a complete money loser. All their money is from paid advertising and sharing customer data to
exactly. So, but I think he realized much of this. That's on this slide quite early, and has clearly done well monetizing that one way or another. I don't know much about Meta actually. I'm not an investor, but it definitely, I think a lot of this. But yeah, I think so too. So speaking of real estate, and I think what will happen is that people will move from areas where actually no one wanted to live, but they had to live there, and people will move to places where people actually want to live. I think typically closer to water, maybe, or a nicer place. Those real estate prices might go up, but I think a lot of stable areas are actually very risky if looking at this. I think they're very risky investment, riskier than Bitcoin, for example. And you don't hear that much in media. So yeah, I think we will come back to this many times. Let's take a few more questions. Yeah, we should definitely do a show on this. James, how much of your portfolio are you allocating to AI? Is that a big part of your portfolio or small?
Yes, it is. It's a monster part. So I own things like NVIDIA, Tesla. I've got a very big position, but it's been very weak so far this year. It's down 25%, but I don't care. I see that as an opportunity to buy more, which I just did on this show live. That's why I was like looking down and distracted. Apologies for that. I love you guys, but it hit a bottom. Anyway, for now, could go lower, of course. Also, on my crypto portfolio, very, very large and very fast growing AI positions as well. I am in heavy into Render and Nosana.
Interesting. Dollar strength index or dollar currency index. I know, James, you're not so much in favor of this index? Do you want
Yeah,
to
well, you're
comment?
comparing a bunch of trash to a bunch of trash. And the cleanest, nicest piece of trash is the US dollar right now. But the US dollar printing, although they say they're not printing, they're doing what's called stealth printing with the BTFP program and other stuff and government programs. Like debt has gone up 1 trillion in the last 11 weeks in the United States. 1 trillion in 11 weeks. We're over 34 trillion right now. So again, Dixie doesn't matter. All fiat is going to zero. That's pretty clear. It's just, as you say, that's how you get poor fast. Holding on to fiat instead of your get rich slow.
Exactly.
No, you get poor slow. I mean, holding on to fiat.
Yeah. Ivan, there was a question here before, now I can't find it, but it was similar to this one, like Polygon and other chains like Phantom and so on. How do you see them doing, or has like Solana really captured the momentum as the main alternative chain to Ethereum here?
Well, for now, Solana has captured the momentum. Polygon, they're working on the aggregation layer, where basically they will be bringing together all the layer 2s in one interface, so you don't have to worry about what's happening under the hood. You get all scalability without really feeling what's happening with the layer 2s. And instead, you as a developer, as a user, you just talk to this aggregation layer, as they call it. The other one, Phantom, I saw there pop up. That one I don't know. I haven't followed it too much. But with Polygon, I see, they're every week, every month, they're doing something. And in terms of the projects, they had a really good role last bull market with these big brands. I don't know how much of that was the brands coming to them and how much was them going to the brands and onboarding them and giving incentives. But if they actually can get adoption with the Starbucks application, or what was the other one? I know Starbucks for sure. And then was it Coca-Cola or something else? That's yet to be seen. I think a lot of this big brand initiatives they've not been crypto native, and that's always hard. It's kind of like with gaming. You cannot get a non-crypto native game to become big in crypto. So tech is in development. In terms of real applications, still more to be desired and to be seen. And this bull cycle will show what they're worth with the new tech.
And this goes back to what we spoke about at the beginning, modular versus monolithic. The complexity of layer 2s is just insane. And literally, I have stuff on a MetaMask wallet that's been there for 2 years. I don't even want a face going in there to try to get it off. It's just too painful. The experience is too painful. The finality is too slow. I don't see layer 2s being the solution. And the other complex part is, just like anything else, at the beginning, I think, Ivan, you said there's nothing. As people continue to build chains, continue to build ETH killers and Sol killers and all that type of stuff, it's winner take most. And what matters is moat and community, as you know as well, and technology. Best, cheapest, fastest. That wins. There will not be 20, 50, 30,000 winners in crypto. There will be very few.
And to add on that, we chat a little bit. I think ease of use is underrated by many people. It really matters. Something is easy to use, high chance to success. People are lazy, and something difficult to use, less chance.
Exactly.
Here we have to talk on this, actually, because this is the first time that a lot of people have gotten an airdrop. It's the first time for many people to actually use a DEX and so on. And I see a lot of people getting scammed. So let's repeat a few things that we have said before, because the vectors are the same. It's not new scams. It's the old scams to new people. So let's repeat a few things. I can start. And one thing is to have 2 wallets. You can't have one wallet where you store all your coins and you're also using that wallet to claim airdrops and go on different sites and experiment, because the day will come where you sign the wrong transaction and you wipe your whole wallet. So you have to have 2 wallets, one where you store stuff, that should be a hardware wallet. You only use the wallet's native application to transfer coins in and out, and to another wallet, which can be a hot wallet, that's where you experiment, you do the airdrops. Count on that one will get wiped one day, but it's then only the ones that you're going to transact with, not your entire portfolio. Other good security tips from you guys?
Yeah, if anything lands in your wallet that you didn't put there, it's a scam.
Yep.
And like things like Phantom, there's a box at the bottom where you can do hide or show coins. Just hide them. Don't even bother trying to delete them. That could even be a little bit risky. Just hide them. And if you look in one of my Phantom wallets, I have 3 separate fake Jupiter airdrop NFTs or fake Jupiter
Yeah.
things. Again, if you did not put it there, it's a scam. Okay, so don't. I think the problem is people are blinded by the excitement of free money and they just want everything and they will
Yeah.
step on a landmine and blow themselves up. So
Yeah.
just keep very small amounts on these hot
And
wallets.
especially Solana, as it's pretty new for most people. On EVM, I mean, people have been through several cycles of scams, and you kind of know to check your approvals and different things to keep in mind. But with Solana, I think it's been in its own ecosystem and just recently gotten a lot of attention. And so most people don't even know what's possible, and most people don't even know what kind of phishing attacks and scams are possible. So it's a new space for most of us on Solana. So definitely split up in different wallets, and don't use the main wallet for airdrop farming.
Yeah. And definitely, I mean, remember that you can create a coin with any name, right? So if you have some coin, anyone can create a coin called USDT or something. Doesn't mean that it's the real USDT. Same with some airdrop or any other coin. Apparently, when I said Juniper instead of Jupiter
Did
on
it
that
pump?
video, someone went and created the coin.
Oh yeah, exactly. I did
So-
a video every 1st of April, by the way. Watch my content because it will be a joke. It's called April Fool's Day. And I did a thing called a GRQ token. It was all how crap it is and everything else, but pretending it was good. It was called Get Rich Quick. And literally within 24 hours, there was 2 of them, one on Binance Chain and one on Ethereum. So yeah, tokens are just everywhere. Layer 2s are everywhere. EVMs are everywhere. Be careful trying to find the next something. There may not be a next something. So, in my opinion.
Exactly. Should we any final words? Otherwise, guys, remember to subscribe to James and Ivan. And anything to add before we close for today?
Yeah, great discussion, guys. Bitcoin still sideways. Hopefully next week we're gonna see a better picture to the upside, and hopefully also GBTC will slow down as well with their selling. And yeah, we're gonna be back next week on my channel.
One final thing, which is a very interesting observation on this, is if you are DCAing Bitcoin, watch carefully. We used to have a phenomenon where Bitcoin would literally fall during the day and pump at night. But ever since the ETFs are here, the Bitcoin price pumps during the day and falls at night. And I tweeted this the other day, expecting Bitcoin to dip over the weekend so the ETFs could fill their bags. And that's exactly what happened. So just be careful out there. It used to be the time to shop. In the US time day. Now it's US time night to shop.
And they kind of do the transaction afterwards when the market already knows what they're going to do. That's that we talked about that when they started. There has to be a front running opportunity here. I haven't really explored it, but for sure the market is trying to take advantage of this somehow.
They are taking, say Ivan wants to buy the IBIT ETF. He buys it at, say, a price of $26, whatever it is, I don't even know. And then they take that money, they clear it, and then 1 or 2 days later, they'll buy Bitcoin with it.
Yeah,
Who
exactly.
knows? It's ridiculous. And in a world where we can do all of this in real time and have it authenticated through the blockchain ledger, they don't even have that. It takes BlackRock 3 days to show up exactly how many Bitcoin they have in their wallet.
Yeah.
Ridiculous. It really is.
Very interesting. Very interesting. Any final words, Ivan, from you?
That's it, guys. Thanks for this week. See you next
Thank
week
you
on my
so
channel.
much.
Bye bye.
See you, Ivan. See you.
Take care.
Bye.
Bye.